We're living in one of the most exciting transformations that the world has seen, where technology doesn't just drive industries, but it's also transforming lives. And this is not just a trend, it's also the foundation of a future where innovation drives an opportunity for 1 billion+ people right here in our country. And who better to help us decode this transformation than someone who has been at the helm, at the forefront of analyzing India's economic as well as digital evolution. It's time for us to welcome onto this stage someone who is consistently ranked as one of India's top analysts and brings unparalleled expertise in global and Indian macroeconomic trends. Beyond the corporate world, he's also played a very pivotal role in shaping India's digital and economic policies, serving as a part-time member of the Indian Prime Minister's Economic Advisory Council, chairman of UIDAIR Aadhaar, and a member of TRAI. Ladies and gentlemen, let's welcome onto our stage the Chief Economist at Axis Bank, Head of Global Research, and whole-time Director of Axis Capital. Put your hands together for Neelkanth Mishra.
Yeah, thank you very much. I'm appreciative of the opportunity to speak to you. I have a crisp 20 minutes to cover something that one can speak on for hours on end. So this is a fascinating area. This is a whole wide-ranging impact on the economy, and I'll share with you some thoughts. The first is that as we think about Viksit Bharat, I think it should be seen as almost equivalent with Digital India. So they are not different, they are completely correlated. The chart that you see, so on the left you have the e-government development index. So this was a study done by ICRIER in trying to assess the size of India's digital economy. What you can see is that most of the green dots, which are the low-income economies, are on the top, on the bottom left side. So you have GDP per capita on the x-axis. You have the index of e-government development on the y-axis. What is also very clearly visible in the second one, which is in the preparedness to accept information technology. So for example, you may have an IT solution, but if your people do not have access to computing power, like today, for example, 87%, so this is as per the USER index, which is the annual status of education report, in 2024, 87% of 15, 16-year-olds in India have access to smartphones, so some form of computing. So I think access to these, among other things, is actually extremely important as well. And as we seek to become more developed, I think development along this axis will be very important as well. Learning how to write software, which of course I think we all know here we are very good at. In terms of producing digital equipment, I think all of those are also very important from a digital perspective. Now, our digital footprint, as you can see on the table on the right, you don't need to read everything, but it is growing very rapidly. So a smartphone penetration, the deployment of 5G, which will further increase data, the Aadhaar, and in fact, frankly, in Aadhaar, we are trying to do things which will significantly expand the usage of Aadhaar, move the offline usage of Aadhaar into online usage of Aadhaar. You will see a very massive revamp of the mAadhaar app, which is underway. So there is a lot of work happening on all of these fronts, which will continue to improve India's footprint. Now, there are many drivers of India's digital economy. So it cannot just be about smartphones. It cannot just be about the internet. It has to be about regulations. In fact, recently, you must have heard Satya Nadella talking about laws being the biggest bottleneck in the adoption of AI. That if you can't define who did what, how do you ascribe responsibility in case something wrong happens? And that itself, the fact that we can't change our laws fast enough, could be an impediment to adoption. So you need a lot of regulation. The government needs to be aligned to it. So if you see the growth of India's digital economy, and I'll break it down for you at what it means, and then we will see where it goes. The contribution was only about 7.4% in 2018. It grew to 11.7% in FY23. About 13.4% is the estimate for this year. And the expectation is that it could be 18 to 20% in the next 5 years. So this is a part of the economy which is growing at nearly 2 times the pace of the overall economy. And it is definitely starting to become much larger than what manufacturing is in India. While we are thinking about this, it's important to understand that it is not just the development of the technology that matters, but also its widespread adoption. And as we discuss AI later in this presentation, I will spend some time on that. Now, how does this 11.7% break down? You can see that the bottom end, which is digitally enabling industry, which is the production of electronic devices, as well as writing of software, provision of exports, they are a very large part. But this also includes businesses which use digital data and digital technologies so for example, e-sellers, digital-only firms providing financial services. I think the value add by those firms is somewhere in the middle. This adds about 2%. And then there is 2% which comes from sectors which are enabled. So when I think about like the banking sector, the fastest growing area of cost. So even though credit growth may be 11, 12%, but the technology expenditure for the banking system in India as a whole is growing at 17 to 20%. So there are some sectors where I think technology is a massive enabler. It's an area of competitive strength. And if you were to add that, you get to a level of about 11.7%. Data management itself is a fast-growing opportunity. So you must have seen that India generates about 20% of global data. Clearly, we are over-indexed on that one, given that we are less than that in terms of share of population. But we only have about 4% of data center capacity. So this itself, I think, is a significant area of growth. And as we think about the next 5 to 10 years and the capex cycle, so the Economist in me, when we wrote about India's capital expenditure cycle, data center capex is starting to become meaningful. I mean, adding, I would say several decimal points. I would say tens of decimal points to growth. So, and the growth in data is likely to keep expanding. But let me first talk about smartphone penetration. There is a long distance to travel. This penetration keeps rising. We are seeing internet penetration continuing to grow. Usage of data continues to grow. The cost is, I'm sure you know, already the lowest in the world. There is no reason for it to rise rapidly from here. The biggest challenge for India has been broadband penetration, which is something that tends to be much more important in other economies. So when you hear data being quoted that India's mobile data consumption is the largest in the world, it is because our penetration of fixed broadband is very low. But this also, you can see, is now rising very rapidly. And this can create completely new opportunities. In fact, fixed wireless access, the FWA, through 5G is also something which actually is very important. Now, the digital payments industry, so we just heard how important UPI has become. It is at 57% of the gross value of output. What is GVO? GDP is gross value added, meaning that you only look at, so you look at the sales that you book, and then you subtract from that all the inputs you took from other sectors, because they are counted separately. If you just add the top line of all the businesses, that is what GVO is, and that is what we should compare payments to. So this is not total share of payments, but you can see that digital payments are rising very rapidly. and they have, I mean, on many fronts, we are a leader in the world. The volume of digital transactions is the fastest in the world. But as we grow forward, I think it's extremely important to manage data better. So while we generate a lot of data, that creates its own opportunities, that improves economic efficiency. But if we do not manage it well, it will start creating problems. And this is where I think the DEPA framework this is the framework used for our DPDP rules. This is something that is extremely important. The American approach of using data, without any restrictions, and then having to compensate once there is a lawsuit or some breach of privacy that someone is opposed, and the other extreme being GDPR in Europe. I think the DPDP rules that we have in India are finding a consent-based data sharing framework, which actually is extremely important as we start building the new layers. So we already built the identity layer through Aadhaar. We have the JAM Trinity, and then now we have UPI. On top of that, as we build things like OCEN, which is the Open Credit Enhancement Network, which is, again, extremely important to solve for one of the biggest problems we have ahead of us, which is how to grow the economy without significantly increasing inequality. Any country that has grown through this phase has had a significant expansion in income inequality. A very major driver of that has been the inequality in capital allocation. It is much easier to provide capital in large ticket sizes than to provide small ticket loans to a large number of people. So as you think about the businesses which require 50,000, 1 lakh, 5 lakh rupees of loans, how do you deliver them at scale? Because the cost of evaluation will be very hard. So things like the account aggregator model are a vehicle or a channel to solve that problem. This is the first example of the DEPA framework or the DPDP rule, consent-based data sharing, that a borrower first consents to its data being shared or her data being shared with the lender, and then the evaluation happens. So you can see how rapidly the accounts that are linked through the account aggregator have been expanding. ONDC is another layer which builds on top of that. So ONDC also uses OCEN. So if you are a seller of, say, Taj sarees in Bengal, and you have aficionados sitting in Mumbai, you suddenly see an order for 50,000 rupees. You don't have the working capital to make those sarees. You can apply for a loan and get it approved in 6 minutes. So it is only when capital becomes widely available and digital India and digitization are an integral part of that you will see growth happening without an inevitable rise in income inequality. Because what we're also trying to do is become developed while remaining a fully functional democracy. Most economies that have gone through our stage of development were not fully democratic at this stage. So Japan became fully democratic only in 1924. The Americans, of course, didn't have universal suffrage till quite late. When Europe was going through this phase in the early 19th century, it was mostly not democratic. And we've had universal suffrage from day one. So if you don't manage growth and equality very well, it's very likely that the political power will go into the hands of people whose only role is to sort of unwind some of the more progressive policies. So tools like, and so therefore data, digitization, the frameworks like the DPDP rules, and platforms or systems like OCEN and ONDC are an extremely important part. So as good as they are in terms of driving growth, they are extremely important when it comes to sustaining growth and sustaining policy support. The question for us is, can we escape the middle income trap? So the way to read this chart, every dot is a country. So there are countries which, and so you are on the x-axis, you have GDP per capita for 1990. On the Y, you have 2019. This looks very similar if you do it from 1960 as well. So there are countries that were, as a percentage of US economies per capita GDP, were somewhere in the middle, and they have kind of remained stuck in the middle. And so in addition to the changes that I talked about, that very often, like what Argentina and Brazil went through, is that you have a phase of growth, and then suddenly the inequality has risen so much that the politics starts to shift, and you start going the other way, and then you get stuck. Or there are countries like Mexico where you invested heavily because of the NAFTA and a lot of the manufacturing that shifted from Japan and now increasingly from China to Mexico to service the US. But beyond a point, because you're not invested in healthcare, you're not invested in education, when the workers, when beyond a certain level of development, the workers couldn't adapt to the new nature of growth or new nature of jobs. This is something that even China is struggling with. So as China grew very rapidly, it has latched on to the early childhood nutrition, the early childhood education issues only in the last 15, 20 years. And therefore, there's a large cohort of workers in China which cannot do anything beyond the low-end manufacturing jobs they were doing. So there is a very rapid increase in informalization. So as much as we hear about and appreciate the achievements of Chinese tech and massive investments that they've made in very fast-growing sectors, it is very worrying that there's a very large part of China, it's called the invisible China, which is actually struggling because they've not invested adequately in childhood health, early childhood health and education. Now, what technology can do is start to solve these problems at scale. So most low and middle income economies like ours struggle with providing good quality. So what China is going through, what Mexico has gone through, what Brazil, Argentina have gone through are problems that we should also be wary of. And therefore, I think the importance of cheaper diagnostics, telemedicine, remote monitoring, all of these are part of the digitization process, which I think are extremely critical. Now, they may not be very important economically here and now, but as we think about economic growth and sustainability, this is something that becomes very important. The same holds for education. We have seen state governments struggle really, taking on the teacher unions, and despite significant increases in enrollment, the educational outcomes have been missing. I think Digital India and digitization serves a very big role. Now, AI is, I think, a solution to some of our challenges. So as much as it is a threat, perceived threat for a lot of people here, that will AI completely disrupt code writing or provision of business services and therefore take away business, I think that AI will help solve many of the problems. When I think about the economic impact of AI, I see it in 3 steps. So there is the invention, which is the more romantic large language models, massive hundreds of $billions of data center investment, a hyperscaler investment, and DeepSeek and algos and R1 and O3. But the economic impact only starts to happen once you have innovation happening on top of those large language models or the AI engines. So and the biggest impact happens when diffusion happens, meaning that how many people, so you'll see now economists starting to question why is it that despite all of this technological innovation and the massive productivity boost that AI can bring about, why is it that economic change is not fast enough? And it is because because of the lack of diffusion. So there are many parts of the economy, I would say substantial, large parts of the economy, where AI may not really have a role to play immediately or directly. And therefore, the impact gets constrained. So it's not just about the very exciting field of AI and ChatGPT, and most of us engage with it, and frankly, it's astounding what the capabilities are and how fast they are improving. But the economic impact may remain constrained if we don't find solutions. So for example, if you had built a chemical, you found a molecule, but you had not built the glue out of it, it would not have had any impact at all. It is only when you build the glue that it starts to solve some problems. When you start giving out that 5 rupee packet of Fevicol is when the penetration happens. And I think that constraint is not very well understood. The assumption should be that the adoption of AI and some of these tools can be much faster. That you have because whatever is the newest version of OpenAI engines is available to all of us immediately. China does something on open source, and the next day programmers in India can start using it. So I think the pace of change is much faster. But remember that very often the pace of change is constrained by our own human behavior. So as I was saying earlier, it could be, in some fields, it could be as simple as the legal setup. Like, in research, in equity research, which is what I do for a living, we are already having to give disclaimers, or at least in our disclaimers appending, as per SEBI norms, as to where we are using AI, so that there is adequate attribution of responsibility in case something goes wrong. And you can imagine how quickly this can escalate and become a roadblock to fast adoption. When we think about diffusion and the impact it has on the economy, I think the biggest and the most striking example is how quickly our financial inclusion improved. So you can see that because of the fact that we had cheap KYC through Aadhaar, we had smartphones, and the government pushed through the Jan Dhan, our financial inclusion was 46 years faster than otherwise it would have been. So basically, on the x-axis, you have per capita GDP. On the y is percentage of household or individuals with bank accounts. You can see every dot is a country. India, if it had followed the normal course, would have taken 46 years to reach where it was today, if not for the digitization and control. So there is a lot of optimism we should have on a whole range of issues. But at the same time, we have to focus on not just the development of AI and the large language models, but also on business solutions, and then see how deeply we can push them through. So with that, I'll stop. Thank you for being a patient audience. I appreciate it. Thank you.